the way you're saying that there is something to do with the markets, the way Indian market is. But how is it for the, say, if you're talking about European markets and when you're talking about, say, Indian market, how do you see, is there a difference or is there something which is very similar?
No, obviously. I mean, so basically, what I do now is I am setting up a shared services, right? So 5 years back, I set up another shared services, right? So basically, if you see, when you talk of shared services, basically India is the place, right? Now, earlier I was not in this space, and hence maybe I can tell you. So earlier, when I was on the other side, right, these approvals were much easier. Why? Because when I went with a case, it was more, this is needed to serve my client. And the kind of things which were asked were not what is being asked today to me. Because these centers are more for cost, right? So the way to, as you said, India, it's not about India or outside. Even a shared service outside face the same thing. But it is more about what are you doing? I mean, if you are directly in the line of doing, I mean, serving your clients, innovation and all of that, yes, ROI definitely is there. The concept will be there. But the amount of things asked is less. And I can take an example. I mean, long back, right? And this example goes with the sandbox concept, right? You said. So I was given a small amount of money just to create a small team because I had an idea. It was a sandbox concept. It became a very successful idea. Few didn't become, right? Now, in that sandbox concept, finance was not involved at all. Because yes, from the top finance, they gave some money for sure. It was from the board that yes, you can do some experiments like this, right? Now, that is lacking when I see the organization I am in today or I was 5 years back. So here the concept is more like they ask a lot more. Why? You have to spend so much money because you're not supposed to spend money. We came here to save money, right? Now that concept is still there, but the way ROI is seen 5 years back was all about FTs. And you know, GCC is all about FTs, how many you save, right? Now the concept has little bit changed. So finance, I think, now has become much more involved. Earlier, it was more like I just look at FTs, right? And I give you a okay if I see net FT down. Here, now what I see, the whole idea has changed. Now the ROI is not only FTs, but also what value you are creating out of here. And I can see it on ground. We are talking of how much efficiency you are bringing, how much time reduction is there to serve the client, because we are now owning processes end to end, which earlier was not the case. So now finance is more involved. And now I do face issues with finance still, but it's not so much of an issue which was 5 years back. 5 years back, literally it was, I was here, finance was here. I mean, talking was very difficult, right? I mean, every time, no, you can't do it. And then you go via some other route and have it done, right? But now things are much easier, I would say, but still, a lot more things are asked than my earlier life when it was more serving the client, more about innovations. And I think that will happen because those had direct, I would say, impact. These have impact, but takes a little longer time to understand. So these are the changes I have seen, over the years.
So what I'm hearing is that there is change over time as well, and in terms of the attitude of the finance or say attitude of people who are proposing. And as you are also saying that there is something to do with risk capital and risk capital being more available with given the industry that we are. So what has been your experience in terms of the temporality, as we call it, over period? Indian market has also been evolving. So what is your, say, take on the temporality of it?
So I think, I mean, again, lucky to be part of a sunrise sector where, so for us, as environmental problems grow, as waste grows, our business case gets stronger. And well, what's interesting is that consumption is only moving in one direction. Regulations are only moving in one direction. Enforcement is only moving in one direction. And expectations of all stakeholders are also moving in one direction. And therefore, for us, I think it's very strong tailwinds for the most part. I think temporality for us is how do we stay ahead of some of the challenges? And in particular, for example, every market is very, very unique. The strategy that I have in India doesn't work in the United States. Yeah. The rate of change in the United States or Singapore, which are highly regulated markets for us, and what services will work there, what kind of a business strategy and sort of asset service combination you will deploy there is very different from what you would deploy in India or Vietnam. Your Middle East strategy and your Africa strategy cannot be the same. So I think having a very clear understanding of the dynamics of a particular market and its sort of rate of change. Now, I mean, ESG considerations in the United States are very different today than they were 2 years ago. On the other hand, or 6 months ago. Yeah, exactly. On the other hand, Europe is moving in a different direction. We have operations in North America. We have operations in Singapore. So you have to understand each market for what it is. At the same time, each market has its own dynamics in terms of availability of capital, interest rates, cost of capital, and therefore your viability sort of metrics are different for every market. And therefore, having a global strategy but very local or understanding of the micro market scenarios and ability to implement very locally is critical. And I think with this variation, it is becoming even more important.
Yeah. So what you're talking about is projects. And in many cases, I would like to go a little further and say, pick your brain on saying, if there was a project that you loved, it got approved and did not work. And what happens? Does the, say, whole perception about, say, proposer changes, or how does it play out in your space?
So in our case, that happens quite frequently. So because we are like working in a sandbox, multiple sandboxes. So luckily we do have some capital in multiple sandboxes, which we are able to utilize. So yes, we have seen instances in the last 1 year that certain projects or certain products that we intended to develop, where we started development, but then ultimately it turned out to be unviable. There were some backlashes, but again, people understood that, the management understood that, okay, this is a part and parcel of this, a very dynamic and I'll say rapidly changing, say, market environment where the product definition can change in maybe less than 6 months' time. So we are more on the product side rather than on the services side. But ultimately, that product has to fit in somewhere which will ultimately be coupled to the services. So that has happened multiple times. But I think it depends on how well you are able to convince justify whatever you have done is good for the organization from a long-term perspective. I think that is what matters.
How are the capital markets reacted, if you want to say, because there is a lot of finance that is in a, say, decades time, the amount of money that is available in the markets, especially Indian markets, has increased, and a lot of new startups are getting funding from the markets. How does that change this whole dynamics of projects getting approved within the, say, firm?
Because you have a lot of kitty of money, right? People are backing us. There is a lot of money. So you have a lot of chances to fail. Obviously, you are getting rated over that and you are getting evaluated every time. There is more and more checks are coming in, but still you are getting backed out. You're getting backed out. In EdTech specifically, in the last 2 to 3 years have been very different and very difficult. That's where the philosophy changes a little bit, sir. When you do not have much capital, right? But you are competing very hard because everybody is trying to acquire the same customer, and the acquisition, the operations demand money. And if you like to execute fast, but you do not have enough kitty, then you will not be able to spend too much money, and there is a higher chances of you getting failed because you do not have longer runway to compete on the same level with your competition. So your idea might be good, but because somebody else had more money, they outpaced you or they outlived you. So in a startup where the kitty is smaller compared to your competition, then your ideas, execution, and its value, the research has to be much deeper. You cannot execute fast. You have to research harder, deeper, and the thought process has to be much more detailed. So that's where the pace of it goes down, but the execution will be very pinpoint. So that's how I guess the backing also happens, on the capital markets. What the project are, who are they backing to? This is
In the technology, like for example, technology's life is now it's like 1.5 years, right? The technology is changing. So for us, what is very critical is that to make everyone understand that what will change, right? And have the same pace to invest and make sure we prioritize our pipes. And so we'll have thousands of ideas, but then, what are the no regret moves and what are the ones which we will, take a risk on becomes very, very critical for us. So that's one. And the second one is to make, able to articulate and sell those ideas to our clients to actually say that, yes, this is going to, and, AI and agentic is one of the examples that, everybody knows that what is going to change. Everybody is very curious to know what is changing, how it will impact. So I think for us, the challenge is that we not only have to invest on developing a lot of these POCs and value, but also able to tell the client saying, this is how the life is going to change for you, right? This is how you need to think about it. So I think it is both the ways. It is really capital that we're investing, but also whether we are able to acquire the customer faster than the technology outpaces me. So I think it's a fine balance that at least we struggle in our industry. So in Sir's case, it's all a lot of capital and working capital and it's like hard cash. So there's a sandbox, you play, doesn't work, get out. But in our case, we put a lot of money in process, we put a lot of money in reinvention and things like that. But the outcome has to be felt in terms of cost, in terms of FT reduction, in terms of efficiencies. So I think that's the challenge that we face at least in technology.
I can share one example, the same. So what we have learned is even though the technology is in advanced stage and if you are adopting but your consumer is not ready, then this is a dead duck for you. So MagicBricks has launched AR VR product a decade back. So we did this product, we set a lot of kiosks, we set in different airports, but there's no acceptance with the consumer. So that's a kind of a huge investment which we have learned that. So we decided, let's put this on hibernation mode, not let discontinue it. When the right time will come, then we'll enable that.